This is a very quick recap of using these two platforms, which is Trading Light and High Block Capital. So let's quickly go over Trading Light. Again, if you have a look at Trading Light over here, a reminder that on the right-hand side, you have the order flow, which is essentially the order book, market buyers and sellers, and it's visually displayed within the price chart or in the background of the price action. Now, remember when it comes to this type of trading, there should be an order of priority. The priority that comes first is going to be price action trumps all. What does that mean? Well, looking at the actual price action of the chart, higher highs and higher lows and establishing key areas of support and resistance will be more important than what you're seeing over here. And the reason why is because market makers can set up artificial traps which make it look like price is going to gravitate towards an order, but they know a lot of people are looking at the order flows and therefore it becomes a trap. So your price action analysis, which you've learned in the previous lessons, is of paramount importance and highest priority. So when I look at a chart like this, what would I do? Very simply put, I'd mark out the key levels of interest. First and foremost, you have that level over there, area of support and resistance. You can see very clearly the way prices interacted in this zone. So we mark out that level, and then you'll mark out your low levels. Now, when price comes into these relevant extremities, the extremities are the levels that you've marked out. You simply want to zoom in and look at what's happening over there. You can use this as added confidence when you go onto a granular level, a very low time frame like the 3-minute or 5-minute chart. And as you're about to execute your order, use it as confirmation that price has in fact got big orders set at those particular price points, therefore giving you confidence that price should bounce or reject from those key levels. The liquidation levels on high block capital are typically used to give you confirmation bias on whether positions are stacked towards the long or the short side. You can again see that by looking at the bands on the bottom over here. When massively green, you know that it's mostly longs that are dominating the market, and consequently you should be looking to counter trade them when it gets too extreme. How do you tell this? Well, simply put, you go onto the top here. Total long liquidations should be about 70 to 80% versus total short liquidations. Then you know that market participants are heavily stacked long, and typically then market makers are going to send price in the opposite direction to capitalize on stopping them out or liquidating them out of their positions and consequently getting their big orders filled. In the next lesson, we're going to go into probably one of the most important lessons of this entire course, which is trade execution. You'll learn how to place your stop losses, how to scale in and out of trades, and how to trade like an absolute pro. I'll see you guys all there.